Welcome to the channel, everyone. So if you're new here, this is following along with my dividend portfolio that I started in my tax-free savings account last year in February. So this actually marks the first year of investing for me. And if you want to follow along with all my updates, my buys and sells with the portfolio, and me just talking about, stock market tips or anything I learned throughout this investing journey to create a passive stream of income for myself, subscribe to the channel and hit the like button if you enjoy the video. So with the portfolio, we've reached $11,656.72. So basically no change today. Past week we're up 2% or 281.77 as the beginning of February looks to be good so far. Let's see if that continues. We're pretty neutral this month, but the month just started. That's fine. We're up 3% or 288.79 the last 3 months. And all time we're up $1,065.68 or about a 10% market gain. So let's get into the portfolio and the recent buys and sells. So Apple had very good earnings. They recorded about an 11% earnings beat, so they did quite well. And I have a little bit of money in the cash account because Power Corporation of Canada actually paid us $7.43 dividend yesterday. So always nice to see those dividends come in. We have a bit of money to buy more shares. I'm actually going to save this up. I might buy another share of Power Corp again, which is a great company. And let's just see how the positions are doing. So Alimentation Crew started doing quite well. BAM.A's about neutral, no news there. Brookfield Asset Management has recovered quite nicely from the little market dip that it had. I bought a little bit more Scotiabank. I just reinvested the dividend I received right back into the bank. So we're at 8.63 shares, which is a great long-term investment. So with the banks, I'm just taking my dividend they give me, throwing it right back in, getting more shares, so we're going to get more income in the future. Also doing quite well. And I bought one more share of ENS, so this is our way to invest in Enbridge. So essentially this is just monthly dividend income from Enbridge, and it's a much higher yield than Enbridge. So instead of getting like 6.5% or 7%, we're getting over 10% with this. And this every single month, so it's helping us grow our passive income and giving us more money to invest in good opportunities as they come along. ETHY, I bought one more share. We're going from 35 to 36. So this is our Ethereum ETF, and this is giving us about over a 20% yield right now. So pretty good way to get crypto exposure, but also receive a high level of income, which is what this portfolio is trying to do. And I'd say the big buy for the week was I bought 2 more shares of Intel. So the price actually dropped after earnings. It was at about 50-ish or $52, and it dropped all the way down to 47. So I decided to buy 2 more shares because I think the reasons that it went down just aren't justified, and I think Wall Street just has a bit of a blind spot to this stock. The sentiment is so bad. I'm just going to go over why it's wrong in a moment. And I also bought one more share of Power Corp of Canada. So again, they own Wealthsimple, Great-West Lifeco, and they also own Lion Electric and a couple of other asset management businesses, insurance businesses on the side. So I bought one more share of this. I definitely want to grow this position because they pay a very good yield, a good dividend yield. And Suncor is doing absolutely incredible. The price of oil just keeps going up, and I think oil's up over $88 a barrel. So Suncor is doing very well. I think this has a lot more room to grow even higher later into this year and into next year. So just gonna hang on to this position. They're gonna release their earnings actually today at the end of the day at 5 p.m. So we'll see how good they did. I imagine that they did incredible because last earnings they made about $70 a barrel. Now they make $80. So it should be even better. Maybe they announce, some good news for shareholders, like maybe a dividend increase or more share buybacks or something. But they should be in better financial position than ever because all they need to do is to have the price of oil be, what, $30, $32? And every dollar that a barrel of oil costs over that is just pure profit for Suncor. So Suncor is doing excellent right now. And if we keep having inflation and this drama in Russia and Ukraine, the price of oil will just continue to rise. So let's see what happens there. And with TD Bank, we also received a dividend from them. I just reinvested that back, so we're at a little over 10 and a quarter shares. So with the banks, again, just taking their dividends, throwing them right back in. These are not positions I'm trading. They're just positions I'm keeping for the long term. And I want to get more income and have more ownership of these companies as time goes on, because the bank always gets their money. They charge you for not having money. They charge you for different accounts. They charge you for investing accounts. They charge you interest on credit cards. They charge you on mortgages, auto loans, whatever. Even just having your money in your bank, they make money off your money. So it's just a great business model, and it's not going away. And we bought a little bit more Tesla just because the price dipped and the earnings were just so strong. So it just doesn't make any sense with how strong the company is fundamentally. The price has been much higher than this. So it's not a bad time to pick this up, actually, because people are kind of ignoring this one. So Intel actually raised their dividends by 5%, and that's just great news for shareholders. I just want to take a look at their latest report. And so revenue was up, gross margin was down, R&D was up 11%, and their operating margin went down. Well, why is that? And the net income is down as well, but why is that? Well, gee, maybe it's because they're investing in chip-making facilities. They just recently announced that they're going to be making some in Ohio. So now they're making some in Arizona. They're making some in Ohio. R&D and using money in R&D and mergers and acquisitions is a good thing. That will help Intel grow over time. So for the people that sold out of Intel because the profit margin went down, and by the way, the company forecasted this before. It's not like this is news. The fact is they are investing money into themselves to grow. And I'm not going to punish the company for doing that. That's why I'm interested in the company at all. So because they're investing in building these chip-making facilities, they're going to make more money in the future. Because they're investing in R&D, they're going to have better products as a result. They're going to maybe not only catch up, but also lead the industry in different segments. So whether it's be CPUs, graphics cards, what have you, they have the money to do this. They have a large amount of money versus other companies that are barely profitable, or they just don't reinvest the money well into their own business. Intel has a great history of raising their dividend. They do it consistently over long periods of time. So another bonus of Intel is that they pay a growing dividend. And it's a dividend they can afford because they make tons of cash flow. Their payout ratio is very reasonable. Even if the short-term profits of the company go down, I believe that after 2025 or 2026, it's going to start picking up because these chip-making facilities are going to be built. They're going to make more chips for themselves, more chips for other companies. It doesn't really matter. They're going to profit from the semiconductor space growing over the next 10 years. And if we track the dividends all time, we've received $324.19 in dividend income since starting the portfolio. Annually, we're making $584.20. Monthly, we're making $48.68. So getting very close to a $50 a month average. Daily, we're making $1.60. So I had a goal when I started to make $1 a day. Now we're closing in on $2 a day. So just small little goals to keep ourselves motivated. And last month was the best month all time for the portfolio. $54.96 in dividend income. So this crushes the previous December, which was $45.09. So good progress in the portfolio. This is the first time we've received over $50 in passive income. Just having the portfolio, do its own thing. It's just sitting there spitting this cash at me. And all I have to do is reinvest that back into the portfolio, increasing my future payouts over time. So I plan to try to get this, so our plan is to get up to 50, then get up to 60, get up to 100, and then build this dividend income to a point where it is more than my monthly contributions to this account. That would be a great point to get to. All I have to do is just continue buying in every single week into good quality companies that grow, have a growing dividend, good businesses that are going to stand the test of time. That's why I stress quality. You can look at any one of my holdings. You can determine the quality for yourself. But I definitely stress quality above all else. I would rather pay a little bit more for a good business than, pay a discount for a garbage business that may not last even into tomorrow. So we would just want long, sustainable returns, and we want to hold on to these companies for the long term. We're not looking to trade in and out of these companies. Let me know how you guys are doing with your portfolios, and if you have any comments or questions, just put it down in the comment section below. Have a great day, everybody. If you want to help support the channel, you can use my referral links in the description, so you can sign up for Shakepay and earn free Bitcoin every day just for shaking your phone once every single day. Or you can join Wealthsimple, get the value of 2 free stocks valued up to $4,500. Links in the description.